Welcome to the Capital News. I am your host, Alex Karitis. Today is May 3rd, 2019. Thank you so much for joining me today. Hope everyone out there is doing well. So we had a whopper of a day here on Wall Street. What happened? Well, the S&P was up 28 points for the day, which was just about an increase of 1%. The Dow was up 197, which was about 0.75% to the upside. NASDAQ closed up 127 points, which represents 1.5%. Russell 2000, the small cap index, closed up 31 points, which is about 2 percentage point increase for the day. What happened? We had the unemployment report come out. We're going to get to that momentarily. Oil, WTI is at $61.68. Brent is at $70.89, still to the downside, but a slight pickup through the day, but still down to where it was previous weeks. Gold had a little bit of a comeback, now sits at $1,280 an ounce. Meanwhile, silver is at $14.95 an ounce, and it made a nice little comeback too. I'm telling you, folks, with these precious metals, do your best to buy the dips if you believe in having precious metals. I definitely believe in owning them outright, especially as a product of diversification for your overall portfolio, if nothing else. The 10-year Treasury bond decreased about a full percentage point for the day, now sits at 2.531%. So we had bond buying and we had stock market buying. The VIX, the volatility index, lost 11 percentage points for the day, now sits at $12.87. What happened? Well, again, it goes to the unemployment report. Market expectations were for, maybe 185,000 jobs to be gained. Oh, no, we blew past that. Couldn't do 185,000. That wasn't good enough. 185,000 wasn't even close. 263,000 jobs created in the month of April. So we're told. We were also told that Q1 of 2019 GDP was 3.2%, and we said, bull. That's a bunch of baloney. Something ain't right here. Something stinks. Well, same rings true here as far as I'm concerned regarding the unemployment report. 263,000 jobs. Nobody was expecting this. Where did this come from? No idea. No idea. But before we dive into it, I just want to make sure I touch on a couple other topics before we dive in and do a deeper discussion regarding the non-farm payrolls that came out today. Mike Pence, the Vice President of the United States, is now on the bandwagon with lowering interest rates. He was out there on CNBC. I'm not sure if he was out there speaking with other outlets, but at least he was talking to CNBC this morning saying, there's no inflation at all. There's no inflation at all in this economy, so the Federal Reserve can lower interest rates. Do these people not know what they're doing? They smoking crack? Are they victims of the opioid crisis too? Has it gone to 1600 Pennsylvania Avenue, Washington, D.C.? What's going on here? Where are these people? Where do they have the nerve, the audacity? Or are they losing that many brain cells? Or is this just a major game that they're playing and we're all, we're just the middlemen? We're just here. We're just a bunch of sheep. We're just a bunch of useful idiots for them. And it's the White House against the Federal Reserve trying to box and dance each other into a corner. I mean, what makes sense here? Because you can't say that you have fantastic unemployment numbers. You can't say that you have low inflation. You can't say that we are in the midst of an economic miracle and then say that you want the Federal Reserve to cut interest rates and embark on another round of quantitative easing. That's an emergency measure. Everything's supposed to be fantastic. Why do you want them to do that? I'm getting sick and tired of this because this is fraud. This is fraud. This is deception. This is a game this is too serious. This isn't Parcheesi or checkers. This is people's livelihoods here we're talking about. This is the Republic of the United States that we're talking about. And I'm not being hyperbolic. I'm really not, because this is fraud on a massive scale. This is sickening because they just want to tout the headlines. Just read the headlines. Don't actually read the report. Don't actually do a deep dive and understand what's actually taking place. Understand the headlines, nod your head, and go back to your Zoloft and Prozac stupor and go back to sleep. Pay no attention to what's going on behind the scenes. Just listen to the headlines. Just listen to what we tell you. And of course, Wall Street, they were beside themselves today. Stock markets rallied. which in a certain way is actually ironic if you think about it, because good news, I guess, to the stock market is now good news. It was before bad news was good news, because bad news meant that the Federal Reserve was going to come to the rescue and cut interest rates. Now, given their speech earlier this week, inflation's transitory. Well, I don't think we're going to cut interest rates here anytime soon. They didn't come out and say that specifically, but that was the hint. That was the reading between the lines, that inflation's transitory. It's likely to inch up over here over the next few months, so there's no reason for us to cut interest rates in an attempt to stimulate inflation. Why do we need inflation? If their goals are full employment, which we're damn near there, at least according to the headlines, and you have very low inflation, then why do you need higher inflation? I mean, that's going to be a topic of many podcasts to come, but just real briefly here. If their mandate, the Federal Reserve mandate, is to achieve maximum employment and to have price stability, well, then why do they want 2% inflation? If we're below 2%, 1.5, 1.8, isn't that better? Isn't that more stable? Isn't 1% more stable than 2%? So what are they going after here with 2%? You have to understand, people, who they work for. This isn't a consumer-driven economy, meaning where you and I benefit by being consumers. No. This is a corporatocracy. This is fascism. This is socialism. It benefits the government and it benefits corporations. It benefits the suppliers. That ain't how an economy, a well-functioning economy, is supposed to work. The consumer is supposed to be the boss, not the government, not corporations. Well, who makes out like bandits? The government and corporations. Who gets stuck paying the bill? You do. I do. Who gets bailed out? The government and corporations. Who loses their homes, their jobs, their families, blah, blah, blah? You do. You get the picture? You see how this game is being played? That's why I'm not being hyperbolic here. These are not exaggerations. I am not the President of the United States. I'm not exaggerating. This is the truth. Why the president can't seem to level with the American people is beyond me. He wants to play games. I'm telling you, folks, I still believe he is going to win 2020 by a landslide. But it's probably going to be without my vote, because I can't take this. What he does, maybe what we talk about on the geopolitical report regarding the two-tier justice system, that's what the government's supposed to do anyway. They're supposed to have equal justice under the law. I'm not going to reward somebody for simply doing their job. This is really starting to bother me, because it's disgusting. Another thing I want to discuss, and this is in addition sort of to Mike Pence coming up, we also have Warren Buffett, famed investor, the Oracle of Omaha, out there saying, you know what, there's really no economic textbook out there that can describe what's taking place in this economy. And he says this isn't sustainable in the long term. Well, thanks, Warren, for telling us what we already knew here at the Capitol News, and anybody who has two brain cells to rub together. You know, but the reason I'm mentioning this regarding Warren Buffett is because Warren Buffett rarely ever comes out and says there's ever a problem. He's a buy guy. There aren't any problems virtually ever. He just wants you, everything's fine. The American economy, I'm going to bet on the American economy all the time, every time. And I mean, to his credit, he's made a lot of money doing that. So I give him credit where credit's due. But, you know, he can level with the American people too, but he rarely ever does that. No, that's not his responsibility. It's not. He's the CEO of a company. He owes it to his shareholders to make a profit and this, that, and the other. Okay. But, he could level. He could be a little bit more honest with some of these things, because it's usually just buy, don't worry about a thing. Well, some people have a lot to worry about, especially if you're nearing retirement or, funds are running low. So that's interesting that he now comes out and says this is unsustainable. There's nothing that you can go by. And this is par for the course when we have other discussions relating to other investment managers, hedge fund managers, who are getting out of the game, who are retiring, or who are not performing very well because the metrics that they have used in the past to become successful are no longer working. That's because this market is completely disjointed from the underlying economy, and it is completely disjointed from reality. It's just money printing. It's just central bank jargon. It's just political headlines. You cannot make a living doing this. You can't. You're going to get lucky. Some people out there are going to get lucky, and some people out there are going to get very unlucky. So you better know what you're doing. That's why I stress having a plan, building cash, being diversified, because it's anybody's guess what this market does. Because a couple months ago, a very strong jobs report could have said, well, now they're not going to cut interest rates, and now the stock market's going to sell off. Now, good news, I guess, is good news. So your guess is as good as the next person's, but have a plan and stick to it. So you got Mike Pence out there saying we got to cut interest rates, no surprise. And now you got Warren Buffett out there telling us what we already know, that there's no rationale to what's going on and it's unsustainable. In the midst of this jobs report and how it sort of links up with the phony GDP number that came out, 3.2%, you have to ask yourself, why am I saying that this is phony? Why am I saying this is suspect? Why am I saying this stinks? Well, because of all the other data that comes out on a regular basis. Auto sales just came out. Not good. Multi-year lows. ISM services number came out. 2-year lows. Construction spending is down. What about all of the retail stores that are closing? How is employment increasing at such a rate, at least according to the headline? Doesn't make any sense amidst all of that negative economic news. The 7 million Americans 90 days plus past due on their auto loans. Where's this discussion? What's going on here? What makes sense? I'll tell you what makes sense when you dive into the numbers. And let's just look at something here. All right, allow me to read a few things to you. All right. Now, when you have the unemployment report come out, for those of you who may not be familiar, the headline number is basically, it's called U3. U3. That's headline. So when we're talking about, unemployment's at 3.6%, that's what we're talking about, U3. And there's U4, U5, and U6. U6 is the broadest measure that also encapsulates people who are working part-time for economic reasons. They're discouraged, but are discouraged for 1 year or less. Once you have become a discouraged worker or are no longer working for a year or longer, you are no longer counted as unemployed. You're simply just not counted. So this, again, is government tweaking the numbers. But if you look at U3 versus U6, you get a different picture. And U6 has not moved. It's still at 7.3%. However, we have a 49-year low in regards to U3, which is at now 3.58%, or what they're just going to say is round up in 3.6%. Okay? So, with that understanding, 49-year low U3 unemployment of 3.6%. Yet, the labor force, both employed and unemployed, shrank for the third straight month. So these things are at odds with each other, folks. That's why I'm saying something suspect here, all right? So again, both employed and unemployed shrank for the third straight month. That's the labor force. With employment stress levels at 7-month highs. Payrolls had a strong gain on top of minimal upside revisions, albeit with still low annual growth. Advanced March merchandise trade deficit showed minimal revisions. Issues with missing consumer goods accounting and GDP, which we discuss here. Nominal Q1 2019 construction spending declined year to year for the first time since the onset of the Great Recession. 3 consecutive real quarterly contractions now are in place. This is construction spending. Heavy downside revisions and negative March construction spending imply some downside revisions to Q1 GDP. We're not surprised by this. Meanwhile, March 2019, real U.S. median household income declined for the second month. Well, we're in the midst of an economic miracle. Your incomes are declining. Okay. Mounting consumer liquidity stresses negatively impact economic activity. And then we are left with the GDP conundrum. The consumer, the U.S. consumer, controls about 70% of the GDP, but generated only 22% of Q1 GDP growth amidst mounting financial stress. And again, that goes to lowering incomes. That goes to slower wage growth. That goes to all of those 7 million people out there who are 90 days plus past due on their auto loans. rising defaults on credit cards, rising delinquencies and defaults on student loans. I mean, come on, you can't make this stuff up. They just want to read off the headlines to you. Don't go in and actually pay attention to what's said beneath the curtain. Don't do it. Don't pay any mind to it. Labor market stress increased for the third month. Although the headline U3 rate dropped to a new low of 3.6%, the labor force declined at the same time by 490,000 people, with roughly proportionate declines in both the employed and unemployed. Accordingly, both the participation rate and employment population ratio dropped to 7-month lows, indicating rapidly mounting labor market stress. The counts of distressed workers and those working part-time because they could not find full-time employment rose by 215,000 in the month. At the same time, the count of full-time employed fell by 191,000 in April, following a drop of 190,000 in March. So the count of full-time employed fell over the past 2 months by 381,000. But this is the best jobs report ever. This is the best jobs recovery ever. This is the report, folks. I can't make this up. The government can make it up. Liars can make it up. Politicians can make it up. Talking heads on Wall Street and the mainstream media can make it up. But that's not who we are here at the Capitol News. This is the news that they don't want to discuss because it ain't pretty. It doesn't fit their pretty little narrative that everything's fine, that Santa Claus is coming, that the Tooth Fairy is going to leave you a present tonight. They don't want you to know the truth. March 2019 construction spending declined in the month on top of downside prior period revisions, with negative annual growth in nominal first quarter 2019 generating a major recession signal. First quarter 2019 nominal year-to-year growth in construction spending turned negative for the first time since fourth quarter 2006, leading then into the Great Recession. That nominal series remained underwater year-to-year until the fourth quarter of 2011, other than for some brief bottom bouncing at the recession's depth. In inflation-adjusted real terms, the new headline reporting showed that first quarter 2019 activity was negative quarter to quarter for the third consecutive quarter. This is, again, construction spending. Given major downside revisions to the January and February residential construction spending estimates, with a further hit to the headline March numbers, implications here are for some downside revisions to the recent Q1 GDP report. Can't make it up. This is not a good report. This is not good economic news. Yet, the stock market would have you believe otherwise. The bond market, again, there was buying in the bonds today too, suppressing interest rates, making it a little bit more difficult for people seeking yield to go into the bond market, I guess, and say, well, I guess you got some cash sitting on the sidelines. Yeah, well, maybe we'll get a better return in the stock market, and you have both go up. Again, both sides can't be right. I mean, you can play this game for a little bit. That's what we're in the midst of, a major game. Politics, economics, high finance. I mean, you throw in the Russians and you have a great spy novel. I mean, we're in the midst of a movie, and you couldn't write it. This is real life. Truth is stranger than fiction. The sad thing is, you don't simply just get to go home after the movie. This is the real world in which we're living. These are terrible numbers. This is not good. This goes to the further conversation that we've been having here regarding the demographics. There are a lot of people that are reaching retirement age and are leaving the workforce, and that's what we're starting to see. So this isn't such a great thing of people coming into the workforce. This is people leaving, and then it just becomes a matter of the numbers being adjusted. That's what we're in the midst of here, people. Because when you have a lower unemployment rate headline, U3 at 3.6, but you have the employment labor participation rate going down to 7-month lows, that ain't good. It's contradictory. Just like everything else is contradictory. We're in the midst of an economic miracle, the best economy ever in the history of the United States, which is a bunch of baloney. But the Federal Reserve needs to lower interest rates and it needs to embark on quantitative easing. Makes absolutely no sense. Q1 GDP made absolutely no sense. The United States consumer makes up roughly 70% of GDP, yet Q1, at least according to what we're told by the government, the consumer only contributed 22% of that growth. Net imports were down, yet we're told that inventories increased. So you have imports go down, inventories increased, and then you look at all of the production numbers, and that's contracting as well. So how did they build inventory? What's going on? Plus, that was in the midst, the first quarter had to deal with the government shutdown. That was supposed to be such a hindrance. Who is controlling these numbers? I'm serious. Who's doing it? Because something is amiss. This is fraud. I have a big problem with fraud. I hope you do too. I don't believe anything that comes out of China, but we had the president earlier in the week calling out China, saying, look, they are embarking on a fantastic, praising them for their stimulative efforts, saying that's what we should do here in the United States. Do you really think we should be following the model of a communist country? He said in the State of the Union, this nation will never be a socialist country. Yet he wants to praise the Chinese on their quote-unquote economic model? This is a game that should not be being played. I don't know why the president can't come out, like I said, and go on an educational tour, because he used to say things that made sense. Now he's just out there. He's wandering in the woods. Yet he's with company. Mike Pence is with him. Larry Kudlow's with him. Steve Moore's with him. Although Steve Moore, I forgot to mention this yesterday, so many of you I'm sure are aware by now, but Steve Moore, who was on the economics team for the president, who he was going to nominate for the Federal Reserve, he removed his name up for consideration as well. So Steve Moore will not be nominated to the Federal Reserve Board. Of course, he had to go through and be confirmed by the Senate, which is why this is all the hoopla. If it was just simply the president could name him and he would be there, he would be there. But he doesn't. He has to go through the Senate, which, of course, is right. That's the process. But there was a lot of dirt that was dug up on him, a lot of issues, a lot of, politics, and he withdrew. Same thing happened with Herman Cain. Sexual allegations resurfaced. Same things that came up when he was running for president back in 2012, and he withdrew his name from consideration. So now who is the president going to put forth? I have no idea. Steve Moore may remain on as a member of the Trump administration, or at least as some sort of advisor here or there in regards to economic matters, but he is out. He will not be sitting on the board of the Federal Reserve. So again, there's games being played here. I'm telling you, folks, and it's being done in public. So at least in that way, if you understand the sort of the game that's being played, I guess at least we have some kind of transparency. It's just a shame that the game has to be played at all. I don't think it has to be. Now, again, I'm not the president of the United States, so maybe he's smarter than me. Maybe he knows more than I do. Of course, he has some more information than I do, but nevertheless, there's more than one way to skin a cat. You could be more of a leader and educate people and tell them what's going on here. You don't have to be this, forever perpetual cheerleader. There's other ways to do it. You can say, yeah, you know what, I believe in this country and we can get back on our feet, but we got a lot of things that we have to clean up. And again, the president doesn't even talk about the national debt. He doesn't talk about Social Security and Medicare and Medicaid. Everything's fine. There's nothing to worry about. Larry Kudlow comes out, doesn't even talk about it when he's asked. He says, we'll just grow out of it. Yeah, we'll just grow out of it. No, not a problem. It makes absolutely no sense. It is completely and utterly shocking to me, this unemployment report. And it's going to be very interesting to see what Wall Street does next week. Are they going to digest all of this news, or could they, they couldn't care less? I'm going to say they couldn't care less. But who knows? 2 days, like we said earlier in the week, following the Federal Reserve's report and press conference from Jay Powell, the chairman of the Federal Reserve, 1 day doesn't make a trend, 2 days don't make a trend, and now we had a reversal because we had 2 down days, and now this one was up to the moon. So it's going to be interesting to see what happens Monday, and that's where I'm going to leave it off. Thank you so much for joining me today, ladies and gentlemen. Thank you so much. Enjoy your weekend. I will catch you here on Monday. Oh, and enjoy Cinco de Mayo on Sunday. This is the Capital News. I am Alex Kreitis. Godspeed.